What's up, YouTube? Welcome back to another episode of KJ the Investor. This is yours truly, KJ, and without further ado, let's go ahead and hop into the portfolio. As you guys can see, the investment account, we're sitting at $62,732.55. Over in the traditional IRA, we at $46,730.40. So guess what, guys? We're back to an all-time high in our portfolio right there, looking at $109,455.64 overall. Right back up, might as well say back up to $110,000. So anyway, what I got going on, buying power sitting at 16.66 and 64 cents. Man, that's a lot of sixes, but yeah, you guys get it. Right here in my options, I got an options call for my SG $15 put, expires tomorrow. I actually have a cash secured put that I'm selling, and I need this particular play to stay under the $15. SG stands for that company, Sweet Greens. They're kind of like a super healthy company. They make premium salads, healthy smoothies, and blended up vegetables and fruits and all that kind of good stuff, right? So I got an option call for them, trying to play it safe. I got 4 contracts going on with it. Let me click on it. $20 a piece, because 20 cent actually means, 20 cent, one contract. That's going to be 100 shares. So you multiply it by 100, it's actually $20. So I got 4 contracts. That's $80 premium that I collected. And let's take a look at right now the current price of Sweet Green is going to be $15.70, which is good because earlier today it actually dropped below the $15 strike price. So if this thing ends tomorrow on the 16th below the strike price, I will be assigned 400 shares of Sweet Green, the company. And if I don't want to be assigned that, then I have the option to roll the position out further in time, collect another premium, and give this stock more time to actually play out. That might be what I do if the company ends up dropping below my strike price and staying below my strike price. But as of right now, currently tonight, it made its way back up to $15.70 at market close. Stimulate my return. Boom. Right now, I'm already sitting at the positive $63. And I'm trying to get the max profit of $80. That's how much premium I collected on these 4 contracts. If I was to end the position early, like right now, I would collect $63. And to be honest, y'all, when the morning gets here, as the day goes on, and I see that the position is either, if it's moving in my favor or staying in my favor, I'll let it play out all the way. But if not, and I got a return like this, I'll just end the position early and then collect the difference in the premium, the 63 from 80. So, it'll be $63. So, $17 will be going back. So $17 is all I'll be short from the 80. So that's how option trading work, y'all. So just kind of explaining that to you a little bit. But as you see right there under the history, May 13th, which was Wednesday, $80 premium was collected. So yeah. Anyway, option trading just to kind of bring in some extra income as I wait. Today, the stock I want to look at is Walmart, sitting at $96.19. Today, Walmart had an earnings report. By the way the chart looks, it looks like Walmart did not have a great earnings at all. But the truth of the matter is they smashed the earnings. I listened to the earnings report this morning while I was at work working, and they had, hands down, they had a tremendous earnings report. Their CEO, Doug McMillon, very confident with the company, even with talks about tariffs and navigating these different terrains, and 47 doing all this tough tariff talk. And Walmart CEO still pulls out all the stops in the wins when it comes to knowing what to do and how to make profit in any type of circumstance. So I got a dividend right here for Walmart, $26.64 off of 113.35 shares. Market value $10,903.23. Average cost is $58.71. I actually wish I would have bought more at that price, but I'm DCAing into the position. Y'all know I love the DCA because I'm long-term investing. Just because I'm doing option trading for short-term gains, it's all good. Extra passive income never hurts anybody, right? We're going to expand this portfolio quickly, and we're going to get there a lot faster. A lot faster than before. And now my total return, I'm up 42, 48, 82 cents. So I'm up 63 point, almost 64% in this position, y'all, with Walmart. Like I said, the dividends automatically, drip is automatically on. It's going to be automatically reinvested back into the position, into the portfolio to buy me more shares of Walmart. Now, like I said, I got 113 shares. As long as you got at least 100 shares of a stock, guys, you can sell cover calls to kind of get that premium and collect extra income. And that's exactly what I'm planning on doing with Walmart. I'm going to start selling cover calls with this company just to kind of get that premium. Nvidia is another company. I've done the cover call with that company before. It pans out to be a good one. So I'm going to be using these companies, man, that I got these shares in, to create these, to LCF, free cash flow. So like I said, Walmart beat on top line, they beat on bottom line. Revenue was good, PE ratio was good. Even then, the tough questions came about with the tariffs and things, projecting future sales, which Doug, he kind of explained that, even he was like, nobody has a crystal ball of what the markets would do when the tariffs are actually in a full effect. But even if they were even if 47 and China was to come together and come up with an agreement, the acts have been done. So we're gonna feel effects of the tariffs eventually, 2 months down the road, 3 months down the road, whatever. We're going to eventually feel the effects of it no matter what, because regardless if they pull them back now and just erase them all together, because the ones that has been put into effect is in effect. And so it might take 3 months to actually manifest itself, but it's something that's coming. So you guys just kind of hang tight, get ready for that increase on prices and things like that. So that's what I'm trying to tell you. If financial freedom is our goal, and you've been rocking with KJ the Investor, you've been rocking with me for a while, you already know we're retiring early, getting off these jobs, and financial freedom is the goal. So you got to have more income sources than just a job. You got to have more income sources than one or even just two. So for me, I do work a job right now, but trading, options trading, getting into that, learning that even more and more, it's becoming, is right now I do it part-time, but eventually you guys see the writing on the wall. It's going to become a full-time situation for me, and that's how I'm planning it out to be. Taking awesome companies like this one, nice premium companies. And like I said, when you sell cover calls, if the strike price that you select never is reached, then you get to keep that premium and you get to keep your shares. And if you're doing cash secured puts, if that strike price you select never gets reached, like I got this for SG, which is Sweet Greens, if that $15 strike price for the put is never reached, then my contract will expire worthless, and I get to keep my premium and my collateral, which is actually the cash that I put up to get these shares. So, yeah, man. And then, even if it does expire in the money, even if it does expire in the money, it's okay. Next thing we do is work a strategy called the wheel strategy. So that means I no longer will have the cash, but I actually have the 400 shares of the stock. So all I would do then is just, instead of selling cash secured puts, I would just sell cover calls. at a higher price than what I bought them at. You see what I'm saying? If I'm buying them at the $15 strike price, I would sell covered calls for whatever's in there over that. And then set my date, set the strike price, and hope it gets filled and make a profit. Guess what? Even when I switch over to selling covered calls, when I create that contract as the seller, I still collect the premium. If I make the contract as the seller and I'm doing cash secured puts, I still get the premium because I'm the seller. Sellers have a better advantage percentage wise to win the trades, and sellers also have an advantage of collecting premiums every single time they create a contract for multiple stocks. So you guys already see it. You see the writing on the wall. Your boy is doing what he got to do to get the way he got to go. So, like I said, I'm pretty transparent on this channel. Buying power, let's click on that. As you see right here, I got optional collateral, $6,000 in there. Pending orders, $451. So individual cash is actually over $7,000. So yeah, we'll have some liquidated cash here soon. Like I said, tomorrow the 16th, the contract actually be fulfilled. Right now we're out of the money on this particular contract, which is good. And I needed to expire out of the money so I can keep my collateral, which is the cash, and then I keep that premium. And who knows, I'll probably open up another one, collect another juicy premium, and then just do it all over again and just hope that it expires out of the money again. All right, guys. Hope you guys enjoyed this episode of KJ the Investor. This is kind of an update of what I've been doing. The market's been great. I wanted to cover that earnings report from Walmart. It's been other great companies giving out reports, but you guys know, you've been rocking with me, that I used to actually work for the company, and I'm a deep shareholder of the company Walmart. I'll be coming live with you, selling some cover calls here shortly with this company, and maybe doing some wheel strategies just so I can continue making some good income. All right, guys. Until next time, this is KJ the Investor, over and out. Keep your heads up. Peace.